Well, if you haven't already noticed, it has been a volatile year for the markets. They have managed, however, to still all be in the green for the three Wall Street indices. The Dow, indeed, up 8.5% so far this year. Well, Merlin Rothfeld from Online Trading Academy joins us now to look at all of this from a technical perspective. Merlin, we just got the fundamentals with Peter Cardello. He was painting a picture for the first quarter of next year of high inflation, sluggish growth, and therefore volatile markets. Can you bring up the three Wall Street indices, starting with the Dow Jones Industrial Average, and tell us what you're seeing from a technical perspective?
Sure. Well, I agree with Peter. I think you're going to have a very high volatility trading ranges are going over the next, into the first quarter. If we look here on the Dow, you can see we have the Dow Jones Industrial Average. I'm looking at the 50-day moving average with also the 200-period moving average. And you notice the Dow Jones Industrial Average is actually encroaching right on that 200-period moving average there, which is a pretty risky point for many hedge funds and institutional traders. They're looking at a break of a 200-period moving average. It's kind of an ultimate selling point for their portfolios. So as we approach that, that should act as support. If we do break the 200-period moving average on the Dow Jones Industrial Average, I would say you have tremendous downside potential there.
What about the S&P 500?
S&P, yeah, it looks a little bit better to me. I mean, I think with the Dow Jones, you only have 30 components, so it's not really that great of an index. The S&P, obviously, you have a lot more shares in there, all 500 of them, so you have a little bit more buoying that index. If we look here technically, you can see we have kind of a support level going in through there right around the 1400 level, and that is a key area for me as a shorter-term intraday trader as well as a long-term swing trader. Once that level is broken, you'll probably see a drop happen pretty quickly down to that 13.5 level, and after that you have more downside movement. So right now we're just in a really choppy, erratic, kind of a volatile trading range, as you can see from the highs up here. Let me get on the screen here.
Yeah, Merlin, what about, let's get to the techs and take a look at the NASDAQ if we could. Last I checked, it was still up, what, 10+% or so for the year. What do the charts tell you?
Well, the charts are telling me kind of the same thing. Let me clear that one out. Charts are telling me kind of the same thing. If you look through here, you do see that kind of support level running right through those little lows there, which is the focal point for me. I'm primarily a NASDAQ trader as well, trading just tech stocks, so this is kind of my stomping grounds. The interesting part here is if you look at it on a 10-year chart going back to the crash pre-2000, we're nowhere near our all-time highs on the NASDAQ. Okay, we're basically at a 38% Fibonacci retracement level there, whereas you look at some of the other major indices like the S&P, we're a double top at all-time highs, and the New York Stock Exchange is at all-time highs as well in the Dow.
So what, we're less than halfway from the peaks, is that right still?
We're less than halfway. So basically, if you put it into layman's terms, the NASDAQ's barely back on its knees, so to speak. So it has a lot more upside potential, I think, as I think you'll see some more money come back into techs. And, Peter mentioned some of the financials are a bit beaten up there, and I think that'll continue. I think the credit crunch will continue to hit NASDAQ or New York Stock Exchange stocks.
Yeah, interesting. Okay, well, if you reckon that tech is your stomping ground, why don't we just narrow tech down a little bit into some of the subsectors and take a look at the stocks, the semiconductors.
Yeah, semiconductors are actually my area. I mean, I'm trading primarily individual securities within the semiconductor index. So if you look here, you've seen a pretty substantial beat down, so to speak, on the semiconductors. We are below the moving averages, both the 50 and the 200, but you've seen a pretty sharp sell-off here over the last few months on semiconductors. And over the last week or two, you've had a nice little rebound, which doesn't technically give me a long-term buy signal, but it's starting to show that there might be some strength within that sector. Now, maybe a little bit more confirmation through some technical indicators would want me to buy into that, give me some long-term buying opportunity there. But right now, I am slightly bullish on semiconductors, and we'll probably look at some individual components of that going forward here.
Yeah, we'll do that in just a bit, but, why are you bullish? Because, we've broken through the NASDAQ, that is, the 50 and 100-day moving average. We're below support, are we not?
We are below, well, we actually just bounced off support on the stocks, for example. You're looking right around 400 as the support level. A lot of them have just been beaten up way too bad, and there's a certain amount of pain out there. For example, companies like AMD have been from 14 down to about 8. The average investor out there, regardless of using stop losses or not, is still feeling the pain and a much higher percentage decline in price in some of these semiconductor issues like Broadcom or Xilinx or AMD.
Okay, let's bring up Broadcom if we've got that chart there, and tell us what you're seeing, Merlin.
All right, with Broadcom here, we have a shorter term. We've got 12 months, so you're looking at that support level I was mentioning earlier, right in through here. But notice the highs we've come from. If you look at Broadcom, was up at $45. You're now at $25. So you're looking at a $20 drop, almost 50% decline in Broadcom's price. And fundamentally, Broadcom is still a pretty good company in what they do in their products and services. So it may present a buying opportunity. Now, in the class that we've been teaching this week here in Singapore, we've been looking at Broadcom as a potential buy. And unfortunately, over the last 2 days, this decline in prices has kind of negated that buy entry price that we were looking at right around, right at the $28.20 level. So we've been using it intraday as a short-term day trade in class, but other than that, it's long-term. Looks like there's some upside for me.
Oh, okay.
All right, interesting stuff. Merlin, thanks for your time. Good to talk to you. Merlin Rothfeld from Online Trading Academy right here in our newsroom.